Hi, everyone. I'm Mani, the founder and CEO of Valur. The Qualified Small Business Stock Exemption, or QSBS, is the most critical tax benefit for small business owners, startup founders, investors, and employees. QSBS allows qualified owners to eliminate up to 100% of their federal and potentially state income tax on eligible assets. In this video, we'll explain how QSBS works, how you can maximize your tax savings from it, and the requirements to qualify. First step, you may be wondering, why does the QSBS exemption even exist? Congress enacted the Small Business Stock Tax Exemption in 1993 to encourage investment in specific businesses. It did this by providing a simple tax benefit. Anyone who starts, invests in, or works for these businesses can exclude certain gains from federal taxes when they sell their shares, provided they meet specific conditions. So how does QSBS work? Today, the primary benefit for holders of QSBS is a 0% capital gains tax rate on gains up to $10 million per company, or 10x your investment per person, whichever is higher. So if you live in a high tax state like New York, that could mean an extra $3.7 million in your pocket on a $10 million sale of equity. But with proper planning, you can avoid taxes on more than $10 million. The Qualified Small Business Stock Exemption is $10 million per taxpayer per asset. You can take advantage of multiple exemptions to avoid taxes on more than $10 million of the same asset with a strategy called QSBS stacking that we'll explain in another video. So you're probably wondering, who can benefit from this? There are a few different groups of people who typically benefit from QSBS: entrepreneurs and small business owners, small business and venture investors, and employees of startups and small businesses. Now, this all sounds great, and you're probably wondering, what are the requirements to qualify for QSBS? Unsurprisingly, the tax code rules on QSBS can be tough to follow. Shocker. And there are specific nuances to these requirements, but we're going to do our best to simplify them and make them digestible here. The first requirement is called the original issue requirement, and this means the taxpayer who received the stock must have received the stock from the company. That is, not from a secondary sale or in exchange for money, other property, or services. Most equity grants to founders, employees, and investors will qualify this. The second is a 5-year holding period. That means the taxpayer must have held the QSBS stock for at least 5 years before the sale of the equity. The 5 years starts from when the stock was exercised, not from when you were granted the stock. Third, has to be a domestic C corporation. That means the company must be a U.S. C corporation when you receive the stock and for most of the time you've held the stock. This isn't a significant barrier for most people if you set up a U.S. C corporation. Fourth, the active business or qualified trade requirement. This specifically means that the company must engage in a qualified business. For example, most professional service firms like finance, investment management, and hospitality businesses will not qualify, but most technology companies will qualify. Fourth, the business requirement. At all times before and immediately after the issuance of this taxpayer stock, the corporation's gross asset must not exceed $50 million. This can be complicated, but a rough heuristic for startups is that you will likely qualify if you were issued your stock before the company had raised $50 million in a single round. Still, the best way to figure this out is to ask your company's finance team. There are also additional state tax rules. Now, 45 out of 50 states follow QSBS, which means you can avoid state taxes as well. But some states, notably such as California and Pennsylvania, among others, do not follow QSBS, and you'll be paying state taxes when you do qualify for QSBS. Some other states, such as New Jersey, impose additional requirements to receive a state tax break on QSBS stock. If you want to learn more, check out your potential returns from taking advantage of QSBS or QSBS stacking. You can check out our in-depth articles or easy-to-use calculators at Valur, VALUR.io, or set up time to chat with one of our experts. Now, a quick word about Valur. We've built a platform to give everyone access to the tax planning tools of billionaires like Facebook founder Mark Zuckerberg and others. We make it simple and seamless to pick the best strategy, set up, and administer these structures at a fraction of the cost of competitors. I really hope you found this video useful. If you still have any questions, please visit our website at Valur, VALUR.io, where you can read more content on these subjects, play with our online calculator to discover your potential financial gains, or schedule a call with us.